If DeepSeek adoption intensifies, and it is immensely popular, does that start a price war for AI services, or does the sector resist lower pricing and instead double down on issues and reputation, let's call it that, trust and safety, given all these current concerns on the Sino-US relations front, data privacy and security?
As you say, it raises so many issues, and I don't think we've necessarily got to the bottom of all of them. I think certainly we know the headline capex number isn't real. We know there's definitely been some advances in terms of reduce inferencing costs, but generally that's a good thing. And actually we've seen a great cost down curve in terms of inferencing. Remember when people were concerned about Google search queries being so expensive because of the inferencing costs, and we're just not seeing that. So there's some very much some puts and takes in there. I mean, I think the biggest takeaways for me are just that open source models are getting so close, or in some cases maybe even beyond proprietary models, and that is a major step forward. And that's why I say a Meta is well positioned in this, or we're seeing in China and on Alibaba side as well. I think the other big takeaway is that we always had concerns that actually if your business model is to develop a proprietary large language model and try and monetize that, that's going to be challenging because there's going to be a lot of competition. It's a very capital intensive business, and there are a lot of companies out there willing to maybe give that away for free or open source that because they're going to monetize in other ways. And obviously that would be the difference between an OpenAI or what Microsoft's trying to do. They're very different strategies out there, and it comes down to actually being able to analyze what is the AI strategies of these companies. Do you think that's attuned to the different dynamics and new innovations we're going to see, and what's going to be the best stock outcome out of that?
Richard, it's interesting, isn't it? When you look at the current market setup, we have to reprice, arguably, the impact from DeepSeek. We have to reprice what Trump and China tariffs means for the tech sector as well. And on top of that, you've got the added issue of the utilities. Arguably, you don't need the most expensive or powerful chips, and you don't need as much power. So is megacaps tech still going to be collateral damage in a coming trade war if it gets to that? And is the market getting it wrong on utilities and selling them off? Is that unwarranted?
Well, there's a lot to digest. Hopefully that means I won't be replaced by AI anytime soon. But you've got to remember, we've gone in the space of a week from Project Stargate, and we were spending far too much on AI capex, to doomsday scenarios that we're not going to spend any AI capex at all. And the market tends to swing between extremes, and the reality is somewhere in between. And I think that's where stock picking comes in, because even if you look at the Mag 7, they're taking very, very different approaches to this. And you've seen that in terms of the stock market has actually been fairly rational and has been pricing that into different stocks. Whether you're more exposed to AI capex, in which case you're probably coming out of this negatively. If you're a user of the end technology, or you're going to proliferate that to your users, you're going to be a beneficiary. And we've seen that rotation into software, into Apple, into Meta, and some of those internet names. And then some debate as to what that means for the cloud names. Now, we still think, when you think about what you need to proliferate AI going forward, and the scale, the compute resources, the software capability, the data, being able to protect consumer privacy, that still plays pretty well to some of the competitive moats of these big tech companies, and ultimately they'll be delivering strong growth. Even Microsoft, where the market was disappointed, they're still delivering very strong growth. And as long as that's reasonably valued, and again, if you look at the valuations of the Mag 7, they're all over the place. We still think there's an opportunity as active managers to be able to differentiate them, be able to capture the best opportunities for our clients.